Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Today, we're going to explore how Walmart reached an impressive $1 trillion milestone, focusing on the key strategies that made this achievement possible. We'll look at the factors behind their success, including their approach to growth, innovation, and customer focus. This will give us a clear understanding of the business decisions and market conditions that allowed Walmart to reach this remarkable point. Let's dive into the story behind this milestone and what it means for the future. Walmart began as a small five and dime store in a rural town and has now reached a milestone few companies achieve: $1 trillion valuation, putting it alongside giants like Apple, Microsoft, and Amazon. This transformation is striking because Walmart was once seen as a traditional retailer, perceived as too slow to keep up with Silicon Valley's fast pace. But in just a few years, it has shifted into a technology-driven powerhouse. This success didn't happen by chance. Walmart made deliberate choices to innovate rapidly, invest boldly, and embrace AI, automation, and omnichannel retail strategies. By doing this, it has redefined itself, combining its vast retail experience with cutting-edge technology, ultimately surprising Wall Street and entering the ranks of the most valuable companies in the world. This story shows how the world's largest retailer by revenue shattered expectations through strategic transformation. Walmart's leadership set clear goals to guide the company's shift towards technology-driven growth. One key objective was to transform Walmart into a tech-powered omnichannel ecosystem, moving beyond traditional retail to become a digital commerce and data-driven platform. This meant focusing on high-margin areas like artificial intelligence, advertising, automation, and digital retail, rather than just relying on physical stores. Another major aim was to compete more effectively with Amazon in e-commerce. Walmart wanted to close the technology gap by improving the accuracy of online searches, speeding up order fulfillment, and leveraging its extensive network of stores as local distribution centers. This approach was designed to make shopping more convenient and efficient for customers while boosting Walmart's online presence and overall competitiveness. Walmart aimed to boost profitability by focusing on higher margin revenue streams, such as expanding its advertising business, growing membership programs, and increasing its global e-commerce presence. These areas allowed Walmart to improve profit margins that had traditionally lagged behind large tech competitors. At the same time, Walmart invested significantly in building a resilient, future-ready supply chain. By leveraging AI, automation, and better forecasting tools, the company worked to reduce costs, enhance efficiency, and operate more like a digital enterprise, ensuring it could meet evolving customer demands and adapt to changing market conditions. Walmart made a major leap forward by placing artificial intelligence at the heart of its operations. In late 2024, the company used AI to clean and organize an enormous data set of 850 million product lines, something that would have taken a decade and a massive workforce without this technology. This effort significantly enhanced the way customers find products online by improving search accuracy and making the digital shopping experience much more seamless. At the same time, Walmart's decision to move its listing to the Nasdaq Global Select Market sent a clear message about its future direction. Joining the ranks of leading technology companies reinforced Walmart's commitment to becoming a tech-enabled retailer, fully embracing its vision of being people-led but powered by technology. This strategic shift reflects how Walmart is evolving from a traditional retailer into a modern tech-driven powerhouse. Walmart's omnichannel strategy builds on its extensive network of over 4,700 stores across the US, which act as local fulfillment centers, speeding up delivery and pickup options. This approach also extends globally, with strong e-commerce operations in key markets like India through Flipkart, Mexico with Walmex, and China. Additionally, Sam's Club has been revitalized by integrating scan and go technology, making checkout faster and more convenient. By combining these channels, Walmart creates a continuous loop or flywheel that connects physical stores and online shopping seamlessly. On top of that, Walmart has invested heavily in automation within its warehouses, using advanced technology and AI to predict demand more accurately. This not only makes the supply chain more efficient, but also helps reduce overall costs, allowing Walmart to operate more smoothly and respond quickly to customer needs. Walmart has seen a big increase in advertising revenue, growing 53% and turning retail media into a major high-margin part of its business, following a trend where retailers use their data and online traffic much like big tech companies do. At the same time, their membership programs are growing steadily, with income up 17% year over year, reflecting strong interest in subscription services like those offered by Costco and Amazon Prime. Additionally, as consumer confidence has dropped significantly, Walmart has successfully positioned itself as a go-to store for both budget-conscious shoppers and wealthier customers by offering great value, meeting changing consumer needs during uncertain economic times. Walmart's growth has been steady and strong, which is crucial for a company reaching the $1 trillion mark. In just one quarter of fiscal year 26, revenue rose by more than 6%, with global e-commerce growing an impressive 27% and US comparable sales increasing by 4.5%. This steady growth created a reliable financial base that reassured investors. Alongside this, Walmart adopted a tech mindset, shifting the way it operates by focusing on rapid innovation and digital-first strategies, including AI-driven decisions. This transformation helped Walmart compete directly with Amazon, matching its pace of innovation and keeping Walmart relevant in a fast-changing market. Walmart's move into newer high-growth areas like advertising, automation, and memberships has been key to boosting their profit margins well beyond what traditional retail offers. These sectors attract more investor confidence because they generate higher returns. The leadership transition in 2026, with John Furner becoming CEO, sharpened the company's focus on adopting AI and pushing digital transformation further. This shift positions Walmart to stay competitive as technology continues to reshape retail. At the same time, Walmart's ability to maintain trust through its stability and scale, especially during economic uncertainty, has brought in more customers. They have managed costs effectively while keeping prices competitive, which reinforces their commitment to delivering value and reliability. These factors combined have been crucial in driving Walmart past the $1 trillion mark. By the start of 2026, Walmart achieved a historic milestone by crossing the $1 trillion mark in market capitalization, becoming only the second non-tech US company to reach this valuation. Reflects the effectiveness of its strategic transformation efforts and strong financial performance. Over the past 3 years, Walmart's stock price surged by 130%, significantly outperforming most of its retail competitors. This stock performance underscores investor confidence fueled by consistent revenue growth, expansion into high-margin verticals like advertising and automation, and a well-executed omnichannel strategy. Together, these factors have driven Walmart's evolution from a traditional retailer into a diversified powerhouse with robust market value. Walmart's financial results for fiscal year 26 show strong momentum across multiple areas. Revenue grew by over 6%, driven largely by a 27% increase in global e-commerce, highlighting the success of their expanding online presence. Advertising revenue surged 53%, reflecting Walmart's growing influence in retail media and the monetization of its vast data assets. Membership income also rose by 17%, demonstrating customer loyalty and the value of their membership programs. Adjusted earnings per share increased by nearly 7%, reaching 62 cents, which supports the company's strong profitability. Long-term, research reports recognize Walmart's transformation into a tech-powered omnichannel ecosystem, confirming its premium market valuation and ability to stay competitive in a rapidly evolving retail landscape. This combination of consistent financial growth and strategic innovation underpins Walmart's position as a leading trillion-dollar company. Walmart's rise to a $1 trillion valuation shows that it's not just about being big or well-known. The company made a conscious choice to reinvent itself quickly, moving away from traditional retail and focusing on technology. By adopting AI, improving its operations, growing higher margin areas like advertising and memberships, and positioning its brand around innovation, Walmart transformed into a technology-driven global ecosystem. This achievement sends a clear message that even large, established companies need to adapt to stay relevant in today's world. Walmart's decision to embrace change has led to historic financial success and set an example for others in the industry. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.